Hi, my name is Joan Grimes, and this is my daughter, Jennifer Wallace, and we are estate planning attorneys in Walnut Creek, California. And today we are talking about a very important topic, trust funding.
Trust funding. So if you guys have seen some of our other presentations, we like to use our handy dandy box. Feels like Blue's Clues. Show about for little kids. But anyway, we have a box that represents your trust. So this box is supposed to represent your trust. Your trust is a box that you put your things into. And as we've talked about in other videos, the trust has rules kind of on the outside of the box that indicate what you want to have happen to the assets in your trust while you're alive and doing well, when you become incapacitated, and upon your death. The most important thing, though, is that once you have established a box and created a box and you have some rules on the outside, is putting things into the box.
That is a major problem. Many people make a beautiful trust to get a beautiful binder. It all looks really nice, and there's nothing in it.
So we're going to talk today about how to put things, first of all, what assets should go into your trust, and two, how to put them into your trust. My husband and I just established our own trust, and we are actually in the process of doing these very things. So I'll kind of walk you through our experience and our clients' experiences of what they're doing. So we have a PowerPoint presentation. So let me share my screen with you guys and share so that you guys can see what it is we're talking about. Slideshow play from start. So this is our trust funding.
And before we get started, we should tell you that all the information we're giving you today is general information. It should not be used for any specific thing. You should always go and talk to your lawyer and find out what you need to do for your specific situation, because these are general rules and we want to make sure that you do what is best for you.
Yeah. So today, again, general rules. So we have a box on the slide, and we also have our box here. We're into boxes. And the first most important thing, which I actually sadly put third here on the list, is your house. In general, houses always, especially principal residences, always go into the trust.
Yep.
So my husband and I own a home, and so when we established our trust, we had to execute a new grant deed to transfer title from our names as individuals, Jennifer Wallace and Taylor Wallace, husband and wife. We owned it with community property provider survivorship. And we did a new grant deed, which transferred the title into the trust. That grant deed has now been recorded with our local recorder's office, so that the whole world is on notice now that my husband and I own a house and it's in our trust.
And you want to make sure in California, because that's where we practice, that when you do a grant deed, or sometimes we do what's called the trust transfer grant deed to put it into your trust, that you also do the preliminary change of ownership form that goes with that. Because if you don't do that form, one, they for certain charge you an extra $20, but more importantly than the $20 is that your property can be reassessed if you don't fall within one of their exclusions for your rights to transfer it into your trust
For property taxes.
For property taxes. So you do not want your property to be reassessed. So it's very important that you fill out that preliminary change of ownership.
Yeah. I would say most of the time it's a good idea to have an attorney help you with grant deeds.
Absolutely.
If you do a grant deed incorrectly, it can put a cloud on the title to your property. It can just create a big mess. We can usually fix it, but going back to try to figure out where the mistake happened, what happened, especially if you don't quite get the right legal description. So anyway, recommend going to see your attorney and making sure that your property is properly in the trust. Now we'll start from the beginning of our list, bank accounts. Should bank accounts go into your trust?
The general rule is yes, your bank accounts should go into your trust. And the reason we want them to go into your trust is because, sort of as a little, backstory, is your trust really has two parts. It has the part that's going to take care of you if you become incapacitated, okay? So your assets are going to be used for you if you become incapacitated. And then it's the second part of, we're going to dispose of your assets, we're going to transfer your assets after you die. If you become incapacitated and your bank accounts are not in the trust, okay, which kind of in the old days, that was more the common thing, is people didn't put them in the trust. But if you don't put your bank accounts in the trust, how is your trustee supposed to use those assets to take care of you?
Mm-hmm.
So the general rule is, yes, they should go into the trust.
Yeah. And just when we'll talk about bank accounts later in more detail, but if you didn't have them in the trust, your agent had to use a power of attorney to access the bank accounts. And banks are really reluctant to be accepting power of attorneys to access bank accounts on a routine basis. So having them in the trust is a nice way to go. My husband and I right now are in the process of transferring ownership of our bank accounts into our trust. We have Bank of America, and Bank of America has some forms that you have to fill out in order to transfer the account. So we are filling out those forms and going to submit them to Bank of America, so Bank of America knows that we would like that account to now be owned by our trust.
And pretty much every bank has their own forms. You just have to go into your bank and you have to get the forms. If you need help, take them to your lawyer to help them fix them and fill them out for you.
Yeah.
And that's what but we definitely recommend your bank accounts go in the trust.
Yeah, it's nice. It's really nice. Brokerage accounts. Also, we'd like those to go in the trust. The brokerage accounts, some people refer to or think of different things when we say brokerage accounts. When I say brokerage accounts, I'm usually meaning investments, stocks and bonds.
After tax.
After tax dollars. That's usually what I mean. And we'd love to have those in the trust as well. So also, one way to tell if a bank account or brokerage account's in the trust is look at the statement, top left-hand corner where it says your name and usually your address. If it says your trust name, then it's probably in your trust. If it says your name with followed by TTEE or TEE, trustee in some, shortened form, then it's in the trust. If you're not sure, call your institution, find out, is this account in my trust? Okay. Rental properties, in or out?
So rental properties are either one, depending on your circumstance. So if you have rental properties, we really want you to go see your attorney to talk about them. So let's just sort of talk about kind of generally in California. So one more time, we're here in California. So if you owned one rental property, and that's the only extra property you had besides your principal residence, and you had a long-term tenant and
or a family member,
you probably can just put it in your trust, make sure you have lots of liability insurance, and be fine. On the other hand, if you have many rental properties or you have apartment buildings, even duplexes, triplexes, quads, we want those to be in LLCs. And the reason we want them to be in LLCs is because we're trying to take your liability with respect to those properties and insulate your liability. So that's what the limited liability corporation does, is it insulates your liability. And that's why we want you to have them in.
Yeah. Now, but also make sure you talk to an attorney before you do this, though, because there are some issues with Prop 13. So a lot of people really care about maintaining those benefits under Prop 13 to keep the property tax basis the same. So transferring properties into LLCs can mess with that. So make sure you talk to an attorney. If you have decided to invest in rental properties, make sure you do it right and protect yourself.
Yes, because just as Jen was talking about, is you're going to lose the Prop 13 if you put it into an LLC, but it might be better to lose the Prop 13 and insulate your liability, especially if it's like an apartment building or something like that. But you should absolutely talk to your attorney, CPA, about those things.
You lose the Prop 13 for the parent to child transfer.
Parent to child.
You don't lose it. It's not reassessed for you then. It still stays, the Prop 13 keeps it at you just lose the parent-child part.
Right, you lose the parent-child.
Perfect. Just wanted to clarify that. Retirement accounts. In general, most people leave their retirement accounts out of the trust. Why? Tax reasons. Always tax reasons. So in general, if you look at a 401k, IRA, annuity, those usually at the top, at the left-hand corner where it has your address, will just have your name. It won't have the trust name. And that just means that you as an individual are the owner. So if you have your trust, it's not in the trust, it's sitting outside the trust, okay?
And that's what we want generally. And the reason we want that generally is because IRAs, 401ks, annuities are going to be taxed as they come out. You're going to have to pay
That's right.
taxes on it. And the tax rate on a box is very high. Okay, it's very high after a minimal amount. It's 40% after you hit the minimum amount, which 14,000. So we would much rather have these IRAs, 401ks, annuities outside of the trust. However, there's exceptions to that. And the exceptions are that you may have a special circumstance where after your death or after your spouse's death, you really need those assets to be in the trust. And the big exception where we see it most, where people make the trust the beneficiary of the 401k, IRA, annuity, is where you have small children. And so you need to fund the trust with that money, or you have children with special needs and you need to make sure that that money is there for them.
So for my husband and I, we have our trust. We have our bank accounts that we're in the process of putting them into the trust. We have our house in the trust. We have our retirement accounts outside the trust. They're just owned by the two of us as individuals. For me, my primary beneficiary is my husband. So if I die first, it would all flow to my husband. And then my contingent beneficiary is our trust, because we have a 3-month-old baby. And she could not receive our retirement. She would buy teething toys, and, So if my husband and I both have passed away, all of our retirement will flow into the trust and will be held in trust for our daughter's benefit until she turns, I think we said 25. So those are the rules.
So there's kind of an offset, is that it's tax-wise, it's not the best thing to have the money in here, but it's better than having to have a guardianship and having court intervention to hold these assets.
Yeah. So last but not least, tangible personal property, by jewelry, paintings, china, silver.
So those things we should put into the trust and by way of an assignment of personal property.
What does that mean?
That means that you, as part of doing your trust, you sign a piece of paper that says that you are assigning to your trust all of your tangible personal property into it. But there is an exception to that. And
cars we leave out of the trust. So my husband and I, we've done the assignment saying that all of our personal property is owned by our trust, just in case we have something really expensive when we die, then it will be owned by the trust, even though most of our stuff is, nobody's going to want it. Our cars, though, we've left out of the trust just because it's a pain to deal with DMV and transferring title. And it's pretty easy to transfer title of vehicles after somebody's passed away.
And also, you want to make sure, sometimes you'll see people who will put cars in, or if they have a car collection, they'll put into the trust. You have to make sure your insurance company is okay with them being put into the trust. Some insurance companies are not okay with cars going into trusts. So you have to make sure that your insurance company is going to be okay with how you handle your cars. Generally, we do. We leave them out of the trust unless it's a very expensive car. If it's a very expensive car, then it will go into the trust, but you have to make sure that you really dot your I's and cross your T's to make sure that you're not causing more problems by putting it into the trust.
Yeah, I think that was pretty good. Are we missing any assets? I think we've covered a lot of the general ones. Remember, again, these are just general rules. Make sure you talk with your attorney. A lot of people do a beautiful job, like you said, creating these wonderful trusts, and then they forget the most important step. And that's to put things into it. So please put things into it. And
if you have more questions, you can always look at our website, and there's lots of articles on our website, or you can give us a call, and we do free consultations.
Yeah.
So thank you so much.
Thanks for joining us. And now we are learning how to do this, and I'm doing stop share screen. Bye. Thank you.